Hola guys, que paso? What's going on? This is Jala Pablo. Thank you for tuning in. Boy, I got some exciting stuff for you today. Like I shared with my Discord group earlier, I created a new an indicator based off of one of my trading strategies or my analytical strategies called the Iron Dome, Ground Zero. And so the Iron Dome tracks the 4-year cycle tops, the 4-year cycle bear markets throughout Bitcoin's inception. Remember, we've been going off the theory of the 4-year cycle theory. Well, the Iron Dome, this Iron Dome indicator that I've created really highlights it. I'm going to show it to you now. And so basically it's you've got the 3 simple moving averages, you've got the 200, you got the 400, and then you've got the 200 weekly that goes beneath it. Okay, and when the price action falls underneath the 200 and the 400 simple moving averages, it falls under a pocket, basically the dome, which is the 400 and the 200. Remember, I told you it's this very, very almost impenetrable dome after Bitcoin makes an all-time high. And I went all the way back to the inception of Bitcoin to show you that I'm not crazy. I know what I'm talking about. You can look this up on your own. So here is Bitcoin. Here's that first peak here, that cycle top from June of 2011, and then it fell down through the 400 and the 200 simple moving averages on the daily, mind you. This indicator is for Bitcoin on the daily. All right, if you try to use it on a lower time frame, it's not going to work right. So make sure, if you do want to incorporate this into your analytical style, you use it on the daily. So it came down here. Now this is the 200 weekly simple moving average. Bitcoin hadn't been alive long enough for this to register, but nonetheless we can assume it was down here in this area. The point I'm trying to make is that every time Bitcoin makes an all-time high, and I'm going to show you this, and comes back down, now it comes down and retraces through the first to 200 and then the 400, before it comes back up through the Iron Dome. This is now the Iron Dome resistance, the 2 and the 4. It touches, or sometimes goes through, the 200 weekly. Okay, so we see this here, and this was in December of 11, and so now we're going to go to where we get all 3 now recorded officially, and let's go ahead and look at the Iron Domes and see what happened on which. Now the first one we come to is here, 2014. All right, this is the first official dome that we can register, that we can track using this indicator, and so we have the Iron Cross here. This is when the 200 crosses beneath the 400. We get the Iron Cross, and then you see Bitcoin goes down. Now this is now the dome, and the indicator shades it. The way I programmed it is that this is shaded in like a rust color. It's kind of trying to look like a dome, Iron Dome color. And the price action is beneath it. We see an attempt here. Now this is back in 2014, mind you, before the players were even into this game. And we had a touchdown here at the 200 weekly. And this would have been the place to buy, obviously. This was the bottom. We had a couple areas of throw over here. And then we marked back up above above first the 200, then the 400, right? And then we had this macro bull market here, this amazing bull market. It's just crazy, right? Well, I want you to pay attention to the dates, because remember, again, we're tracking the 4-year cycles, dome tops. Now that's the 2014 dome, and now here we are. Here's the next dome where the 200 crosses beneath the 400 simple moving average, and this is the 2018 dome, 4 years, right? So the 4-year cycle. We see that Bitcoin, once it crossed under the dome, it wasn't able to prevail back above it until touching down at the, that's right, the 200 weekly. And this would have been the place to buy, right? This is the bottom. And then it marked up through it. We had a little bit of consolidation down here, a little bit of hugging, and then it marked back up through the 4 and the 2, and it created another top. Now this would have been subcycle. This is a whole new cycle here. Here, this was a black swan event. This area here was the pandemic that we had in 2020. And so it was a unique thing. It came down beneath the dome again, but even then, you see it touched the 400. It didn't come back up until it retested the 200 weekly. and came back up. And then so now this still counts for, this was now 2020, so this is between the cycles. This is why this is kind of like an aberration. It's an anomaly. It's what we call a black swan event. But we still see that theoretically it did what it was supposed to do, this is what I'm proposing. And now we're getting more and more into recent history here. This is the 2022 dome, 4 years now. And this is the fractal, by the way, that we've been going off of, and we're still going off of. This fractal has not been invalidated. We see this rejection underneath the dome here, okay, after making an all-time high in subcycle B of 2022. We retrace down through it, and this last attempt to get over, remember this was the final UTAD. It took it down through the microtrend support, and it retraced all the way down to the 200 weekly. Again, so we see this pattern now. This is 3 times in a row on every 4-year cycle. This is in 12 years now. It's done the same thing over and over again. It's come down, and here what I programmed the indicator is when the price action goes beneath the 200 weekly, which we see it did here, it went very deeply down here. This is ground zero, okay? And I had this shaded in green, so this would be extremely oversold crypto. This is fire sale down here. This is where you want to buy when it's green. I'm not saying it's going to do that this year, but if it does, if you're watching this indicator, or at least if you have a 200 weekly program, then you definitely want to buy in or around wherever the proximity is, above or beneath this 200 weekly. But here we have it, and then I had the 200 temporarily, as long as the price is beneath it, turn red until it marks back up again. We noticed here again, the iron cross. The purpose of the iron cross, this is the bear. This is basically just this is the bearish crossover here, the 200 and the 400 simple moving average. It's just the iron cross. What this does is it basically confirms the dome. That's all it does. We see that here. We saw it here during the pandemic, and then we saw it here at the first recordable one with all 3 simple moving averages back in 2018. And so that brings us now to where we sit today, 2026, 4 years. Now here we go again. 4 years, subcycle B, all-time high, came down. We retraced. We had a close. Now what I count as going beneath the dome is a daily or greater close beneath the 400 and the 200 simple moving averages, and we've certainly had that. We've had something that looks akin to this, right? Back at the sister fractal from 4 years ago. This, which proved to be an ultimate redistribution. Notice this got the iron cross. The iron cross came in not long after that final UTAD, when it tried to break through this iron dome, this 400-200 layer. And then being rejected off that, it wasn't long after we got the iron cross. We haven't got the iron cross yet, but we do have both lines turning red, indicating that we are effectually under the dome, and we are right in line, keeping right in time. Everything is jiving with the 4-year fractal cycles. We even have the micro trend support line here, just like we had here. We had a micro trend support line. Now, let's see. This becomes extremely effective when we here. Let me go here. When we combine it with Wyckoff events, which so you know that you don't. There's no one magic indicator that does everything, right? You use indicators in tandem, the right indicators. You need to find the right combination of indicators. If you're going to use indicators, they need to complement each other. And I find that the iron dome strategy is great for macro, but to really get the full effect of it, you need to merge it with something like Wyckoff, which is what we did here. So this is the latest range that pertains to us. I have the Wyckoff events drawn out, the buying climax, the up thrust, and then the UTAD. Remember, this is the 125,000. This is that all-time high we just had, the latest. And I drew it out here with the macro trend resistance and macro trend support lines here until the support lines broke, and it fell through the structure here at this LPSY. Notice that right at this LPSY. Now this is on the 10-hour, the LPSY, which is the last point of supply. This is traditionally a redistribution range. If you're going off Wyckoff distribution schematics, the LPSY stands for last points of supply. So the price does not usually come back up over the LPSY. If it comes back up above the LPSY, it's no longer an LPSY. This was basically a sign of weakness, and then coming back over it would be a sign of strength or a change of character. So, but we don't have that here. We have the LPSYs transpiring, lo and behold, beneath the Iron Dome. Beneath the Iron Dome, right where it's supposed to. And then we came down here underneath. We have this micro trend support line. We've started this new range. And at this range, I anchored the volume weighted average price, or the VWAP, to the selling climax, just like we did when we were tracing the diamond distribution earlier last year. And we have a creek line going right through the middle of this range right now at the micro trend support. And so this area on top has turned out to be a micro trend resistance line. We haven't been able, so Bitcoin's value is peaking out right at this line, right at this line, which is also touching the fringe of this dome. So the question now is, are we going to be able to come up through this dome? Someone asked me in my Discord group, where's Bitcoin going? I said, well, now we've got an event that we can look at. Now this is on the daily. That last one was on the 10-hour. But let me show you. This is, if you're going to use this indicator, you want to use it again. I repeat, on the daily. It's where you get the cleanest, and that's how I've designed it to be the most effective with its readings. Notice we haven't gotten the death cross yet, or the iron cross. It still hasn't come in. But we're right here, right up at this micro trend resistance line. Remember, we broke structure. We have this micro trend support line, and now this trend has become the resistance, and we're still a ways beneath the Iron Dome. So if we're going to come up, and if this thing is going to reverse, like some people are saying, and we're going to, Bitcoin is now bullish, and we're going to start making all-time highs, and this isn't the end of the bull cycle, then this is going to have to mark up about 15% or so. It's going to have to mark up 15%. It's going to have to blow through this. It's going to have to flip this resistance to support, this micro trend resistance to support, which again, we're going with the 4-year fractal cycles. Bitcoin hasn't done this ever. It hasn't done this after making an all-time high in a 4-year cycle and closing beneath the Iron Dome. It's made attempts at the dome, but ultimately it's failed, like we looked at, and it has a rendezvous with the 200. And here's the 200 weekly. Remember, once it closes beneath it, it doesn't prevail through it without first retesting or touching the 200 weekly, and currently the 200 weekly is at 57.6. So, but what we need to watch out for is in between this space, between this where this creek line is. If we stay up above the creek, or the VWAP, in this range, which I think is a redistribution. If it's a redistribution, then usually in redistributions we have UTADs. They have their own UTADs, which are up thrusts after distributions, or bull traps. And this bull trap, we saw a bull trap like this back in the sister fractal here, where it made this attempt up to get up through the dome. Now this is a closer proximity to the dome than we have this year. We have a greater distance to go. Remember, this is about 11% to this first LPSY. Okay, so if we make it up to this LPSY, then that would constitute a UTAD. So what I'm trying to say is this. Just because we break this microtrend resistance, we got to watch the volume, because it could be a trap, and it wouldn't be out of the ordinary. Bitcoin likes to do that, especially in these redistributions. It's going to come up. I would be surprised, actually, if we don't have another attempt at this dome. I think Bitcoin would have given up too easily. I think we're going to have another stab at this first LPSY, and perhaps even wick through the second, but that by no means can signify that we're out of the haunted forest and that it's all smooth sailing from here, you know, sunsets and margaritas and all that. No, I think we need to be especially careful if we start marking up for here, because that could be the dreaded liquidity sweeps that we see in these situations. So again, we take the Wyckoff, we merge it with the Iron Dome strategy. We use a little bit of a VWAP, and so we can look at this forensically like we're doing here. I could blow this up on a 30-minute. That's the next step. We want to dissect this area, this redistribution on the 30-minute, but this is looking more and more and more like a, you know, kind of like a wedge. This is so typical. You know, we see the higher lows with the spread thinning out, but compressed beneath a micro trend resistance line, beneath a dome, beneath a major historic resistance point with low demand. There's really not a lot of demand. We see supply predominance. Look at all these big supply spikes just shooting up, predominating over the city skyline. I like to think of this vertical bar volume like a city, like a city skyline at night. You see the tallest buildings are those of supply in this. So that's just a cursory glance. You can just eyeball this thing and see that there is supply predominance. And as this thing kind of hugs the microtrend support line, we really should be seeing demand predominance, especially if the spread is being compressed. That would mean that informed interests, market makers are accumulating, but I don't see them accumulating really on this. If they are accumulating, they're just baiting. I think it's baiting weekends to become their exit liquidity that they're going to unload somewhere up here in the vicinity of the dome. And so with that, and that's kind of like what I shared with my with my Discord group. And with that, guys, I'm going to let you guys go. Hopefully you got something out of this. Check it out. If you're interested, you can find the indicator. It's on my TradingView profile, Hala Pablo at TradingView. I'll see if I can put a link somewhere, and you can check it out if you want. It is really interesting. Like I said, it merges perfectly with the 4-year cycle domes. There's 2026, 2024, 2018, 2014. It's like clockwork, right, guys? All right, that's all I got. May God richly bless you. Thank you for watching this again. None of what you've seen is financial advice, but you, of course, already knew that. I wish everyone a safe journey through these crypto markets. And if you'd like to take your trading up another level, or just kind of learn price action and volume, VSA and all that stuff, check out our Discord. I keep it extremely affordable at $25 a month. And you stay as long as you need to. I have tutorials and everything, and you can reach out if you have questions or you want me to look at a coin that you're interested in. I could do that too when I have time. But otherwise, like, subscribe, and you can get plenty just off these free videos that I do from time to time. And with that, I'm going to go. All right, guys. God bless you. Talk to you soon. Adios.